Hi, good afternoon everyone. My name is Ram Damija. Welcome to my channel. Today is 11th of March and Nifty has actually made a very smart comeback today. From what looked like a very bad opening in the morning, Nifty has really bounced back from there, and we I think are going to close at 22,500 odd levels, which is not bad at all considering where we were in the morning and how the world markets were looking. I think it's a very smart comeback. So it's been a good day for the market, and also a lot of names have done well, except for a couple of names, which I will take you through, which fell 27% today. But rest of the market has actually done pretty well. So I think it is a very good day. And one more important thing that has happened is that open interest has again changed back to positive territory from zero point 0.7 to 1.15 as we speak now. So that's another very positive thing. Around 6 crore puts have been added today, which is going to provide a lot of support and cushion to the market. That's what it looks like. US futures are trading up, so that's another positive sign. So all in all, it looks like we have been able to weather the storm perfectly, very nicely today. In the morning it was looking very shaky because US markets were down 2-3%, Nasdaq was down 4%, Asian markets were down 2-2.5%, and considering that we just opened 1% down, and from there we have just made a very smart recovery. So it's been a very good day. It's been a day of good recovery. So I will take you through the highlights of today, how the day has panned out. So this is the Nifty 3-minute chart. As you can see over here, that immediately after open, this is where we opened, we just kind of zoomed up, and from there we have been kind of been in a range. So there was not even one down candle immediately after open. It was all one way up, and by 11 o'clock we had covered most of the ground that we had lost of yesterday closing. So this is where we are going to close today. So there is about 20-25 minutes still to go. So 22,500 is what it looks like, which is pretty good. Now let us look at it on the daily charts. How does it look? So this is the resistance level that I had talked about yesterday, and I had said that if we keep on hitting this resistance level, someday we are going to break it on the upside. Contrary to that is also true that we have tested it 2 times, but we've not been able to break it. This is somewhere around here, this level, 22,650. Now if the open interest holds, then tomorrow again we might make a shot at it, and if US markets actually stabilize overnight, then we might have a gap up also. You just don't know how things play out these days, and then this might get taken out in some sort of a gap out fashion as well. So all possibilities are there. Market is definitely very weak, we know that, but just purely by the options data and the way we have recovered smartly today, we might have a chance at least of trying to test this resistance again, and then let's see if we are able to break out of this or not. Now coming to this open interest, this is the open interest for Nifty, and as you can see today around 5.5 crore puts have been written versus just 45 lakh calls. This is in complete contrast to what was done yesterday. So of course some strong hands beforehand knew that what is going to happen to the market, and that's where probably it was a function of, as I had said yesterday also, the US futures, because they were down 1%. So seeing that, people might have anticipated that US markets are going to be soft. So that is why huge short positions were built. But seeing that today the futures have also reversed. As we speak, futures are up 0.5%, and that is also our markets have our open interest is also reversed. So open interest as we speak is now at 1.1, which is 16 crore calls versus 17.89 crore puts. So that's a good put addition. So we are at 1.1. We are greater than 1 now. Now coming to this is how the straddle looks like. So we opened at about 227 on the straddle, and we went up to about 232, and from there we have gone down to 204. So there has been one secular decline in the straddle, though not much I would say, but still the decline has been quite secular, and we have kind of covered almost about 20 points odd. So 200 points is pretty good for the straddle for 2 days, and my sense is that if markets stabilize, then it should be good 2 days for option sellers in Nifty tomorrow and day after. So that is going to be good. Now this is how the indexes are looking like. Now, if you look at the indexes today, PSC, infra, financial services, metal, energy, pharma, mid cap, all did well. All were closed in the green. And what closed in the red was banking, small cap, IT. IT is understandable because of the fall, the way Nasdaq fell. Auto, media, MNC, FMCG, and Nifty will close in the green. So that's a good thing. That's a good sign. Smart recovery, I would say. Now coming to the heat maps, this is how the heat maps look like. So in Nifty, we had one major issue with IndusInd Bank, wherein the company came out and said that there were derivative losses to the tune of 2.5% of the net worth of the company, and that has resulted in 27% stock tanking. Trent is down 4%, BPCL 2.85%, Sun Pharma 2.76%. Now, if you look at this IndusInd, this is the IndusInd Bank chart. The stock has given now zero returns since 2014. So, if anyone bought the stock in 2014, it's pretty much at the same similar levels. 658 is when it reached. So, you can see this is how it tanked. So, this is the problem. If you go on to individual stock names, this probably will be a Six Sigma event for this particular stock. But this is what happens, when you're stuck in individual names and then there is no exit. So for retail investors, as I've maintained earlier also, that instead of individual names, no matter how good they are, you should look at building mutual fund portfolios. It's very, very tough. No one can anticipate these things. These kind of negative surprises can come from anywhere, and once they do, then there is even no exit. The stock was circuit down till 20% today. After that, only the trading opened, and God forbid if anyone was selling, had sold puts yesterday, so you can imagine, or had longed futures yesterday, you can imagine the kind of loss that person would have had to take. On one day, your entire capital can get wiped out if you encounter such moves. So for retail, it is best to invest through mutual funds, not to be over smart. Try to be over smart, and try to catch fancy names. And 11 years no return, I mean, it's like an entire decade wasted. So be careful in your stock selection. My advice to all the people is invest through mutual funds. That's the safest and the easiest route. Now coming to how Nifty next is, DLF is up 4%, Bajaj minus 2.2, Lodha is plus 5.6% up. Now coming to the broader indices, there was a huge problem, as I saw today, when a lot of these capital market play names like BSC is down minus 5%, Nuvama is down minus 7%, and so on. 361 is down minus 3.65%. So a lot of pain in this capital market play names, and this space is just not stabilizing. It has run up a lot. We all understand that, but it is not stabilizing as yet. So maybe the market still feels that the volumes are going to drop further, or whatever be it may. It's not, this sector is not stabilizing. Now, how do the global Qs look like? Global Qs are turning out to be fine. So Nasdaq futures are up 0.5%. US 10 years is down, which is good. S&P VIX is trying to cool down at 27. We are at 14-15 VIX, they are at 27 VIX, so there's a huge discrepancy over there. If things go south over here, then you can expect our VIX to also go up. So that is going to be a major worry for us if we reach this 27 kind of VIX. Then comes to the US dollar index, 103.5, which is very good for us. Brent oil is at 69, so probably this could also be one of the reasons why our markets are not falling that much, because Brent oil is becoming cheaper and cheaper. Now there is a discussion of US recession now starting to come up again in the news, that US is there's a 20 to 30% probability that US will go into recession. So let's see how that plays out. But as I have maintained before also, US markets are highly overheated, and their world market cap is 70%, their GDP is 26, so it is bound to correct at some point in time. Yesterday we saw a small trailer of that. If US slips into a recession, the entire world will not be spared for sure. All the world markets will go down, but US markets probably will go down further, because they are too overvalued right now. Our currency is okay at 87.26, and gold again crosses 2900 at 2910, and silver is above 32, closer to 33 at 32.8. So the global markets look absolutely fine. This is one post that I had put out on Twitter today. Let me see if it's posted or not. Just give me one sec. which basically talks about how it's not posted yet. So basically, it was a post about gold, how gold prices have moved. I will just see if I can get that thing on again. But it was a post on gold and how gold prices have moved. So I will probably tackle that tomorrow and explain to you. It basically said that how gold has moved against all the currencies and why it makes sense to have gold in your portfolio. Because gold acts as a hedge both against equities as well as currency. So that is one thing that that should be there in your portfolio. Let me see if I can just pull that out. Yeah, so this is the chart which shows how gold has performed over the years, and you can see that this is pegged to all the currencies. So you can see over here, the last column, if you look at the CAGR against USD, gold has given a 9.6% return, against Euro 9.4, against Pound 10.6, and so on. And against rupee, it has given a 12.6 percent return over the last 25 years. So gold is a must in anyone's portfolio, and we have seen that the performance of gold also has been phenomenal. So why not have such a thing in your portfolio, which kind of balances out in terms of the performance as well as currency risks. So I've been maintaining that, and I will discuss that in detail in a couple of days, how gold has basically performed. But now coming back to our markets, how are things looking? As I've said, things are looking fine all right now. The open interest is holding. So unless we see anything major happening on the US markets tonight, which I don't think should be, because the futures are stable and behaving well, we should be okay for tomorrow. So let's see how things go. But today's highlight was actually that accident in IndusInd Bank, which took down the stock by 27%. So I remember some same thing kind of happened, when Satyam fell one particular day and Yes Bank actually fell. So these are very painful things if you're holding these kind of stocks in your portfolio, and hence there is always a need for diversification. There's always a need to go the mutual fund route, go the ETF route, go the index route, and I keep on repeating the same thing. But if anyone is interested for their mutual fund portfolio construction, they can contact me in the Google form below, and I will be happy to assist them in making a good solid mutual fund portfolio which is well diversified and which takes into account a lot of risk management as well, so that your capital is protected and your returns are optimized. So that's it from me now. If you like my video, please do subscribe to the channel. Please do share the video with your friends, family, and I shall see you tomorrow with another update. Take care. Bye bye.